record on this computer. All right. How's everybody doing? Thank you for joining us, joining this web series and this webcast of the business of you. We're going to be talking today about investments, and in particular, we're going to be discussing stock investing. And we wanted to bring this follow-up to the earlier discussion that we had with Tony Cottingham about investing, and wanted to bring this to you really to get you started. So we whetted your appetite, and now we want to take you to the next step of actually understanding how to and learning to invest your money. Again, particularly in this case, we're going to be talking about stocks. So just to let you know, again, we're recording this and we're going to provide it and on YouTube and the other formats in order to protect its longevity and allow you to be able to look at this whenever you either want to get more information, understand a little bit more, or even if you're not ready now to do the investing, so that, again, you'll have it later when you are ready to do those things. So again, welcome. And so we're going to start off. I'm going to share my screen. So we do have at least a PowerPoint for you to look at, so you're not checking out my ugly mug the whole time. But let's, again, go ahead. So again, this is the business of you. And I'm your host, Matthew Roseman. We have an agenda here. The agenda, again, is around the discussion of how to get started investing. And as an agenda, we have our introductions. We're going to talk about starting with why next, the goal of these meetings. Next, we're going to talk about types of investing. And finally, in the last two, we're going to get into stock investing and how to buy and sell a stock. Again, to my participants that are online, you can stop me at any time and ask a question. All right, so I'm going to go through these slides kind of quickly so we can get to the meat of the discussion. Again, I'm Matthew Roseman. I'm one of your moderators today. I also have online with me Tony Cottingham. And Tony, you can say hi.
Hello, everyone.
All right. And, we have some guests online as well. If any of them would like to speak up, I'll give them a second to just say hi. It's up to them. Going once, going twice. All right. Okay, so again, Matthew Roseman, that's who I am. Just quick background on me. I'm not the investor expert here. I lean on Tony, and he wouldn't even call himself an expert. But what I do bring to the table is I do have an MBA. I specialized in finance and accounting, and so I know and understand a lot about, companies, how to value a company, what, different things mean when it comes to stock investing. So I want to be able to provide that side of things as we talk about this. All right. Next, let's start off with the why of stock investing. So the benefits of stock investing are that it allows you to grow your wealth outside of your day job. That is really the big thing. You're not essentially putting in labor in order to, get that extra dollar, to get, gain on your money. You're allowing your money in many ways to work for you. I know a lot of you have heard that term before. There are multiple forms of investing, and we'll talk about that a little later, and it allows for diversification. Diversification is important because you, again, in simple terms, don't want to put all your eggs in one basket. And another benefit of investing is it allows you to put your money towards your 5Fs. So we talk about that, and I'm going to keep talking about it. It's about faith, family, fun, friends, and the future. So those are the benefits of just investing in general. Now, in particular, stock investing, the benefits are, here are some of the benefits. It gives you ownership in a company. Again, many people don't really realize that, but as a owner of a stock, you actually have ownership in a company. It allows for diversification of risk easily, and that's because instead of diversifying it, say in real estate or in stocks and different things, you can actually diversify when it comes to company. You can buy an automotive stock, you can buy a technology stock, you can buy a pharmaceutical stock, right? So you're diversifying your money. And it says the transactions are seamless. I mean, you can now do everything on an app on the phone. I mean, you literally don't have to take more than 2 minutes to buy and sell a stock and essentially make money. And the last item is there's a lot of data out there. That's another good thing about stocks, whereas maybe again some other investments. Again, I'll just say, for example, real estate. You might not know that there's a foundation problem with a house, right? You might not know that there's termites in an apartment structure or something, right? But for stocks, those things and that data is public information. And so you generally should know what the next person knows as well. All right. Quick goal of these investing collab meetings. The goal of this and subsequent meetings are to give participants information to make informed decisions on stock investment. We will discuss getting set up, what to look for when picking a stock, how to buy, how to sell, and other actions to make you a savvy investor. All right, I say I'm running through these because I don't want to bore you with slides, but again, let's just quickly go over the types of investings. There are many more out there, I'm sure, than these. But again, some of the big ones are stock, and that's what we'll be talking about today. Real estate. I mean, that's an easy one in the sense that everybody understands about buying and selling property, right? You buy a house, and in 2 to 5 years, whatever, you flip it, and you hope to make more money than what you paid for it, right? There's also the managing of real estate. So you buy a house or an apartment or a small condo, whatever, and you rent it out to somebody, right? And you make money by renting it out, and then you also make money. You hope to make money again at some point if you have to sell it. Other types of investing, you have angel investing, derivatives, bonds, foreign exchange, and then I put you down there. So these are all legitimate investments where you can put your money to grow, and that you is just whatever, your business, what you want, really it's about your business. So like if you want to be an entrepreneur, or you want to do something different that says, okay, I'm gonna invest in me, like well, paying for school, right? For a loan for school, that's an investment in you. So these are all types of investments. All right, the next one. So now we're getting into the nitty gritty, and this one is, what is a stock, right? So I've been talking long enough, but Tony, can you kind of say how you feel, or what do you feel like a stock is? I mean, what does a stock mean to you?
A stock means to me is buying a share of a company. You kind of touched on a little bit about being an owner. So when you buy a stock, or they say a share, you are a part owner of that company, which is a beautiful thing. Most times we often are the consumers, or we're buying merchandise. But how would it feel where you are a part owner of Nike if you like Nike shoes? You are a part owner of Apple if you like buying Apple iPhones. And so buying a stock means to me, hey, it's a part of being an owner. You know, I own a share or however many shares you can afford to buy of a company. And that's really a beautiful thing because, like I said, most of the times we are the consumers and you get your money and you go, you know, buy what you want to buy and everything. But let's change the mindset. Let's start thinking about buying a stock, which to me means I have a share and I am an owner of a company.
Right. Yep. 100%, man. It again, we don't generally look at it like that, but it really is just that you actually own part of a company. The management of that company answers to you when you own a stock. Now, somebody might say, well, you know, it can't be that simple. It is that simple in the sense that that's the reality. Now, because you might not own the majority of the stocks, you know, they might not have to answer to one person, but they actually have to answer to the collective group of their stockholders. And that would be, and you would be a part of that. So that's what owning, or that's what it means to buy a stock. Now, back in the day, they you know, owning a stock was, you know, it was a piece of paper that exchanged hands, and you know, it really was, you know, kind of one to one. But as businesses grew and this country grew, they created what they call stock exchanges, right? And so you hear these terms called New York Stock Exchange. You hear about the NASDAQ. These are different exchanges where, again, it really, what the purpose of it was to make it easier to exchange these ownerships, pieces of ownerships seamlessly. So, I mean, but even that, you know, again, you know, 100 years ago, they were doing it with papers. You know, now they're doing it with computers, right? Where, again, I don't have to see a paper or anything for them to know that I bought a piece of stock. It's all, you know, in the system, and they know that you have a stock and that you own part of it. Go ahead.
A little bit when you talk about the New York Stock Exchange and when it was established, like you said, by passing paper. It probably was formed maybe in the 1700s, somewhere around there. And now the capability when you're talking about using the NASDAQ, I believe that's 1971. A lot of that, when you see the New York Stock Exchange, they sit on the floor and you see people making trades and talking and everything. That's kind of a good example of the New York Stock Exchange. But because of technology, they also can be on the floor and also trade electronically. And normally the NASDAQ is traded a lot electronically, you know, when you place in your orders and your buys and your sales. And like you said, with the platforms that we have now, it's seamless to actually buy and sell the stock. So that's kind of a little history on those two, the New York Stock Exchange and the NASDAQ.
Cool. Thank you. Hey, I see we got a hand raised. Maxwell, or somebody in that household. It says, if I have an average job, is smart to go for a big stock market? You might have to either type that again or actually ask me the question, because I'm not sure I get that question.
I wonder if he asking, should he go and buy a stock that's pricey or spend a lot of money on stock?
Well, yeah. Well, we'll try to answer the questions if he doesn't type it again. But so yeah, so if I mean, you shouldn't necessarily go big. I mean, for big stock market. Go ahead, Tony. You say what you think he asking, and I can follow up with what I'm thinking.
Well, I want to start off with just saying the average job, and I want to kind of deal with the I guess the theme was, hey, if I'm working an average job, can I enter into the stock market? I mean, you know, most folks like, man, I just work an average job, man, so I don't know if I can get in or can I even afford to get in. Mm-hmm. And I would say this, yes, the average person, that's what's so unbelievable about these platforms because they made it easy for the average person
That's right.
to actually go in and buy. So I would say yes, if you work in an average job, you still can invest in the market, and you have to look for stocks that's affordable to you. And what I mean by that, you might not look for the big home run hitter because maybe you don't have the home run hitting money for us to buy a stock at a high value. And you also got to consider, even though a stock is high in value, it always can come down. So sometimes it's not best to be like, oh, it costs this much, I'm going to spend all this money for this stock, and then it might drop on you. So I would say what you have to do is do your research on what stocks that you would like to invest in because the stocks out there that's going for $10, $15. I mean, GE was running at $9 at one point, and they got up to like $13, $14. You got Ford stocks. So you got stocks out there that you can buy that's affordable. The thing you want to understand too is being consistent when you buying these stocks. So look at the value of the stock, and if it's a pricey stock, is it one that you can afford to get in before you throw all your money in one big stock. But for the average person, yes, you can get into the stock market and make smart decisions with the money that you do have. So I'm a firm believer in that.
All right, you know what, and I think I'm gonna get more into it as we go forward. So let's go ahead and move forward because we're going to talk some more about just again kind of how you buy a stock, right? Or even to a certain extent when should you buy one. So let's go ahead and just quickly. So we talked about voting power, and again risk profiles. Different companies have different risk profiles. So I just want to let you know that. And you got some stalwarts that they just give you a certain amount of value over the years. Like Tony talked about a GM, or I'm sorry, GE, a GM. These base strong companies that essentially you're looking for steady incremental growth. You're not looking, like Tony said, a home run. You're not looking to buy a Tesla and see it swing from 50% of its value to 150% of its value in a week. Those are a little bit more riskier. So but yeah, let's continue on. This next one is kind of getting where I was going to talk to about the average man. But right here it says, how do I make money? So just quickly, the simple there's two ways to make money with stock. And again, I want to remind everybody, this is an information session. We're not advocating anything. We're not trying to, sell anything or anything like that. We just want to give information to help you all understand, and demystify the whole stock market, right? So how do I make money? So dividends is the first way you can make money. So what that means is when you buy a stock, say I buy a stock of GM, or Ford or somebody like that. What they do is every year, sometimes multiple times a year, but most of them, when their business is doing good, they give what they call dividends. Essentially, for every stock you own, they give you so much money, basically, off of that stock every year. So they might give you, say it's a $10 a stock, or you have a stock in Ford and it's worth $10. They might take that $10 and say, okay, for every $10, this is an example, we'll give you $1 this year because we made so much money. We're giving money back to our shareholders in the form of dividends. So again, if you own 1,000 of those shares, then you might be getting $1,000 back, right? So that is if you look at it from a percentage standpoint, that's a 10% increase in your money in 1 year, right? So you can take that money, reinvest it, you can take it, use it on a vacation, whatever. That's extra money that you've gotten because you own part of that company. Now, the most the way that people really see the stock market generally, especially these days, is really in that second item. You buy low and sell high. And that's the mentality of, if I get a stock, say a stock like Ford, right? Again, and I'll give an even more extreme example, but say a stock like Ford. If I bought it at $10, and then they come out with some big news, or they're doing some good stuff, or they come out and they made a lot of money last year, and then their stock goes up to $12, right? I can sell my $10 stock for $12. And what does that mean? I just made 20% on my investment, right? And so that's how you make money. You buy low, you sell high. Now, again, another example, Tony, did you want to say something?
Yeah, and also that, like you pointed out, that seemed to be the one that everybody looks at a lot, because most of the time when people are talking about the market or stocks, they always talking about, like you said, making money. How do I make money? It depends on if you're trying to make quick money. When we're talking about buy low, sell high, and last video that we did at episode 3, it was talking about the mindset of a person that's investing or being a trader, and that kind of falls in line with that making money, the buying low and selling high. Because if you're in a trader mindset, then yes, if you bought it at $10 and it went up to 12, you can sell it, and you made your 20% off of it, or you made $2, off of that 10, and get rid of it, right away, and just say, hey, I made a profit off of it. So yes, or if you even hold it long term, and you buy it for 10 and it go for 12, and you're like, well, hey, you still make money off of it, but you do have to understand that you won't get the money unless you sell the stock.
Yep.
So, and it's something to go up, or it can come back down, and you be like, oh man, it was at 12 and now it went down to 9, but I bought it at 10. So you got to be aware of that. But if you in trader mode, most times if you just said, I'm trying to make a quick flip, then yes, you would like to buy low and sell high, because you don't want to buy something that is extremely high, because the return off of it is not going to be that much when you buy something low. So yes, get your mindset for that. So buying low and selling high. Remember, more of, I'm in trading mode and I'm trying to just get some money. If you're trying to make a quick flip, you're just trying to get the money. But also you can hold the stock, and the stock will make money for you, but you won't get the money until you actually sell the stock.
That's right. That's right. And again, that goes, again, definitely for your slow movers, those that, again, you're basically investing for a long term, from a long term standpoint. So the only way you get money from those is if they give you dividends. If they don't give dividends, then it's about, I'm just keeping it, letting it, gain in value, and then I'll sell it in the future. So, all right. So just quickly, how much should I invest? It depends. I'm not here to tell you how much you should invest. Not gonna get into that legality issue. I'm not telling you how much to invest. What I will say is, we talked about this before. Don't use your bill money. So to your point, maybe Maxwell, if you got a regular job, if you're an average person, and you're struggling to make bills, then you're not in the position right now to invest. It's not about taking your bill money and trying to flip something so you can pay your bills off. That's not the way to invest. If you got a lot of credit card debt, right? I just talk about we just talked about flipping a stock for 20% in a year. Well, if you're paying 28% on a credit card, then you're going out the world backwards if you're trying to invest in something that's, on average is going to give you, 10 to 15% a year if you're lucky, right? Or not, or if you're good at it. So you don't want to do it like that. But this is, if you have extra money, if you're going out there and buying Jordans, every month when they come out, or you're getting, a brand new car instead of, a used car, then that's money that you probably can use to invest and grow your money.
So throw this in, man. How much are you willing to lose? And so you have to ask that question before you invest, and say, how much should I invest in the market, or how much money should I use to start buying stocks? So being able to understand that, hey, um, you have to have some money that you're going to say that this is investment money.
Yep.
And know that even because investing does not mean that everything may go good right away, but can you deal with, hey, whatever you're going to put in there, that this is investment money, and it may go up and it may go down, and I may have to wait on it to go up, and it may shoot down, and then it may go back up again. But am I willing to say this is the money that I'm going to use to invest with? And not only that, I tell people this all the time, you have to be able to deal with the days where you have to be able to stomach a loss. If you cannot stomach a loss, then it's not good to invest, because it'll be an emotional roller coaster if you're not able to stomach that, hey, there's going to be times where I'm going to lose, but there's going to be times where I'm going to gain. And how long are you able to hang in there? So that kind of gives you a little view of how much do you put, or how much can you afford to put in the market. Is that just money? Then be able to use that for, investment.
Yep. Amen. All right. Hey, so let me get back to this. We're almost finished with this part of it. So, and then I want to actually get into some live action stuff, I guess, to a certain extent. But quickly, don't treat it like the lotto.
Right.
This isn't, don't take your money and take it and bet it all on one shake, so to speak, one roll of the dice. That's not what it's about. Because then again, you're getting into really what could be detrimental to yourself again and your money by treating it like the lotto. That's not what it's for. And then lastly, again, when you talk about how much you should invest, whatever you invest, make sure you diversify. Make sure you don't put all your eggs in one basket. That's not something you want to do. All right. So quickly, again, how to start buying and selling. So we talk about how do you start? You have to go through a company, right? It's not something that you can just kind of pick up a pen and pencil or paper and per se and send a letter or just start doing it out of nowhere. You can't go up to the corner store and buy a stock or anything. It's really about you have to start with somebody, right? So they have these companies out there, Fidelity, E-Trade, different other ones out there where you can begin to buy and sell stock. With the Tony and I believe we have E-Trade accounts, and that again is fairly simple. You can sign up. It's not much different from signing up for anything else. You'll have to put some money in there. In fact, I hadn't worked or used mine in a while, but recently I went ahead and found my account and everything, and I put some money in there. And I thought I was going to be able to use it right away. And what they do is they actually hold your money for a period of time. They held my money for a week before I could actually use it. And the reason they do that again is back to the previous slide. They don't want you using it as a lottery. They don't want you using it to gamble. They want you to be able to make informed decisions over a period of time and not get yourself into any trouble. So I thought that was interesting when that happened. But again, it's pretty easy to sign up. You can link a bank account or I'm sure some other financial means to get some money in there. And then you're ready to go, really. It really is as easy as that. And then you start, again, then you start talking about buying and selling a stock. And so that's where I want to get to next. Tony, did you have anything?
Yes, those platforms are pretty simple and easy to download and set up. Like Matt said, you got E-Trade, you got Fidelity, you got Webull, you got Robinhood. So it's many different platforms that you can trade off on, and download the apps. So it's pretty easy, simple, and set up also.
All right. Here is, so I thought it best not to show you my actual you don't want to see what little money I got in, but this is this is something I found off of YouTube. It says how to start investing with E-Trade app 2021. So this is probably I haven't gotten a chance to look at the whole thing, but you can go in and look at this. Just Google it. But essentially what you start off with is an app page like this. What it shows you at the top is your net assets. So how much money again do you have, including all your stocks and everything that and your cash on hand. So you have a cash account. Then you have your stocks that are worth so much money, and different things like options and stuff that are worth so much money. And that's up here in this area right here. This next section, they talk about your total gain and loss. So that's looking at how much basically you've lost or gained, over a period of time. Now, when it's red, that probably means it's a loss. But that's your total loss. So that's, of all the trading you've been doing, maybe I'm guessing this might be for a year to date. They will show you your total gain and losses. And then this is the day's gain and losses. So they show you how you doing on today, right? So this is some of the information that you'll see starting off. And so then the next one they have is they have a portfolio page. So that shows you your actual stocks. Let me see if I can find a picture in here of that. Let's see. Let's see where I got to go through this again. But they also show you, again, they show your portfolio page that shows you each of your stocks, how much money your stock is worth right now, how much you earn, total, what's your day's gain, all of that. So you can see all of that information for every stock that you own, and you can go and look up stocks. So right here, you push this search button and you go in and you put in Apple, right? You click in Apple, and then they'll bring up this page and they'll show you, okay, Apple is at $282.80, right? That's how much they. So there's not really. I'm sorry. That's how much they cost at that period in time. Like, these are instantaneous quotes. This isn't what it cost yesterday. This isn't even what it cost 5 minutes ago. These are instantaneous quotes that you can rely heavily on. Now, depending on how much the market is moving, by the time you actually make a trade or buy or sell, things might change. But again, typically it's not going to change too much within the few minutes that it takes to buy and sell. Go ahead, Tony. Did you want to say something?
Yes, that's pretty good information to use to see what's going on when you're looking at those prices. It shows you from day, hours, minutes, months, years. So that kind of helps you out kind of when you want to make your decision. And there's also spots in there where it does give you some information on there. You can read up on what Apple is actually doing, what they're coming out with.
That's right.
And also have other people making their predictions on Apple, or what they feel like Apple may be in the future, or just what they feel like Apple may be worth. So that's that gives a lot of information to help you make your decisions also.
And if you there are other apps. Your phone actually comes with apps that where you can look up the market and see how the market is doing, right? Everybody, if you actively looked at it or you made a mistake and hit the market or the stocks button on your iPhone or your Android, you've seen, basically, stock market information, right? So what you want to understand is that, again, all of that information is for people to make informed decisions. When you buy a stock, you want to understand what the price is, and you also want to understand, where is it moving, right? Or what has been doing the last few days, or the last few months, or even the last few years. So just quickly, I wanted to let's look up a stock. So I'm going to look up Apple, just because we was going in that direction. You see this stock right here? It's interesting. I mean, what we saw was at 200 and something, right? So um, there's some interesting things that you want to be able to understand on this page. And I'm not going to go through everything, but just quickly try to get you to understand, or help you to understand what some of these things mean. So right here at the top, this one is the price of it right now, right? This is the current price of the stock at 4 p.m. Eastern Standard Time. That was the close of on Friday, right? So here you have previous close. That's what it was yesterday. So what they're basically saying is that, Apple went down 93 cents right here, 93 cents from Thursday of last week. Here is what the opening was on today. And this one is what the bid price and the ask price. We won't get into that right now, but here you have the day's range. So this 119 to 121 shows you that for the day, Apple moved, between these two prices. All right. One thing that I like to look at is this right here, this 52-week range. What this says is, in the last year, in the last 52 weeks, what has this stock done? So this stock has been as low as $53 and as high as $145, right? So between these two, you can see where 121 falls. It falls on the latter half of it. So, I mean, you would have loved to have bought the stock at $53, right? And then, at 121, you're happy. You're like, oh, I'm making, $70 on that stock. But if you bought it at 144 or 145, I'm sorry, then you're not as happy, right? Because you're down $20. So that's what that means. Let's see a little bit more. You got the volume shares. Now this market cap is an interesting number too. So Apple right now at $121 is valued at $2.03 trillion. That's an incredible number these days. I mean, that's literally the total worth of some countries, right? So that's an incredible number right there. So and Tony, did you want to say anything?
Yes. Where you're talking about a large market cap, Apple is actually a huge company when you're talking about worth trillions of dollars. And that's more worth than some countries' stock market as a whole, just one Apple company. And so something like Apple, when you're looking at the how much it lost previous gains, it's good to look at the 52-week also moving average. Taking a look at that when you're talking about investing. And just because something is in the red does not necessarily mean it's not a buy. It might be worth purchasing something if you feel like that it will grow from that point.
Right. Yep. I mean, that's exactly right. I mean, again, going back to how do you make money, they have this ex-dividend date. That means they actually give a dividend. And that was February 5th last month. But again, if you want to make money too, you buy it when it's low, right? So again, that's why I said about, where this falls on the 52-week. So this is kind of, is lower than the high, right? So if it was at 145, then this might actually go back up, right? So that's the kind of determinations you need to be able to make, or I mean, not necessarily need to be able to make, but that's what you have to decide, whether you think it's going to grow and this is a floor, for right now, and so you'll buy it, or you say, no, you know what, I think that value is a little high. I'm going to stay away from that, right? All right, so we can get into these later. PE ratio, that's price to earnings, and then earnings per share. These are all important, but again, we're not trying to solve everything on today. Go ahead, Tony.
I want to add. I just want to add something quickly too, and this is where it goes back to doing research. Because even though Apple is showing you 121, they did a stock split last year. They actually got up to about 500 and something dollars a share. And what they did was a stock split. And so right now they're showing you 121. This is the reason why they're worth trillions of dollars. But they're showing you a stock of 121. They actually got to 500, and I forgot how much it was. And they did a stock split. And when that stock split happened, they did, I think, a 5-to-1 stock split, in which broke down to maybe $125 a share once they broke it down. And so you have to do your research, and it's just a way of letting people or getting people to buy more Apple shares versus you seeing it at 500 or something dollars. But the value of the company never lost its value, even though they did a stock split. So the value of the company never lost. It just did a stock split and made it seem as if the share is cheaper than it was. So the value of Apple is still up there. It didn't lose any value. And it's actually a good company. But really, if they did do a stock split, it'd probably be like 500 and something dollars a share.
Yep. And so again, we are almost close to the end. Again, I'm not going to take you over an hour, but just quickly want to show you a couple more things, and then I'm going to try to get back to show you how you again, the basic buy and sell. And again, so just quickly on this one, this is the other thing I like to look at. So these are, again, durations of what the stock did. So that's the 1 day. And then you got a 5 day. So you see some of the ups and downs. Then you got the 1 month. So again, it was closer to the 140 something or 133 back last month. And then you got the 6 months. So there you see a peak of 142. That's where one of your peaks happened. You got the year to date. And this is that 145 that I was talking about, where that's the max range, or the max amount that it was worth within that year range. And then, like I said, you got 1 year, 5 years. So you see that, this is all normalized based on, the stock price the way it is now. But you see essentially that Apple has grown, in value tremendously over the last 5 years, which we all know. All right. But essentially what you wind up having is, a screen that basically says, okay, you can buy, let me see if I can do this one. You can buy a stock, right? So when you buy a stock, what you do is you go in and you put in the stock that you're looking for, right? And so what they'll do is they'll bring up that stock and say, okay, you want to buy it. So in order to buy it, you say how many shares of the stock you want. And once you tell them how many shares you want, then they take the price of the stock and they take the number of shares you want. Again, I'm actually pull up mine in front of me just so I can walk you through this. They'll bring in and they'll say, okay, how many? In fact, you go to the trade tab. If you have the E-Trade app, you go to the trade tab and you say, I want to trade against stocks, and it says, search for the symbol right next to it, right? And so you search for the symbol. I'm gonna search for Ford. That's the stock that I want to buy. I type in FORD. It brings up some different Fords. So you got to know which one it is. So, make sure you understand that the particular one that you're choosing is the company that you want, because there might be, 3 apples out there, right? lesser known apples or Apple, Apple Sauce Company or something, whatever. So you need to make sure you got the right stock that you want to buy. You click on it, you add it, and again, it brings it up. It tells you the price. Right now, Ford is at $13.37. And again, they'll tell you some different things. They'll tell you the bid price and the ask price. Now, the difference between that is just like it sounds. If you were on eBay, somebody was asking, $300 for a pair of Jordans, and you wanted to bid 295, then those are the two different prices. I mean, eventually, if you want it, you're going to have to get what they ask for. But again, if they want to sell it, then they might have to come down. So the price that you're going to pay is going to be somewhere between that bid and ask price. So right now, the bid price is $13.35. The ask price is $13.37. Now, the next thing it asks you is the order type. You have 4 different order types. There's the buy, sell, the sell, the short, and the buy to cover. So we're not going to deal with the last 2. We're just going to deal with the first 2 that I was talking about. So that's the buy and the sell. Pretty simple. The next thing that they want, the next item that they want you to fill in is the quantity. So we talked about that. I'm going to put in the quantity of 10. And the next thing that I want to really kind of bring up is this term. The next thing they ask for the price type. Now, the price type, they have different options. I'm only going to talk about 2 today, but they have a market and a limit. So those are important. When you buy a stock, again, when I talked about the stocks move, the stock that you see is the price that you see is an instantaneous price. It's what that price is right then and there. But like you've seen in the movies, there, people are screaming and, money is going back and forth. So that price moves. So when they ask you, do you want to pay the market price? That means whenever they get your request out there, when they go to the floor and they say, okay, I want to buy a Ford stock. When you go out there and you say that and you use the market price, then if something happened with Ford and that price moved, then you're going to get whatever price is on the floor. You're going to get whatever that price is now, right? You might have saw it at $13.37, but because Ford had a big announcement, it went up to $14. They're going to buy it at $14 because you said, I want the market price regardless, right? So the other option is a limit price. What that says is, I only want to pay so much. So again, if you've done eBay, if you've done any kind of auction type things, you say, I'm gonna put in my price. I'm gonna put in $13.40 because that's as much as I want to pay for it. Then they'll say, okay, we're gonna go to the floor, and if it's more than $13.40, we're not gonna buy it. And then the last thing they ask you is how long is that good for? Do you want to just do it for that day? Or do you want to do it for, a month or what? Do you want that price to be good for? So those are the important things that I wanted to tell you. Once you push preview, what they do is they take the number of stocks that you want to buy, 10, they times it, they multiply it by the price of the stock, which here says $13.37. Then the estimated total cost that you're going to spend is 10 times that $13.37, which is $133.70. So once you put place order, it buys that stock. You now own 10 shares of Ford or whatever. And, if there's a dividend coming, they'll get that to you. Whatever happens with that stock, it's yours now. You own it. So just wanted to run through that. I know we're running out of time. I see Tony. Did you want to say something?
Yes, I'm going to say familiarize yourself with that, with those limit and market prices, because that's going to help you decide how you're going to buy the stock. And even when we talk about buying low and selling high, those are going to be very important to set a limit price to sell, whether you want to sell it off at a limit price or whether you want to buy it at a limit price. And that depends on your research if you think that stock is going to go up and down. So familiarize yourself with a limit, buying it at a limit and buying it at market.
Yep. And again, selling is just the reverse of that action, essentially. But it's the same steps that you take to sell. So again, it's for anybody, it's for everybody. Take it as a tool to, right now, if you're not ready to put a lot of money in, that's fine. What I would suggest is, getting an account and start off small. Tony talked about it in one of the episodes. You can start off with penny stocks. You don't have to have $1,000, $2,000, $20,000 to start. There are stocks out there that's literally worth 50 cents, right? And those can move just like any other stock. And so you can just, begin to practice, again, take $10. You can buy 20 shares of 50-cent stock and see how it moves. I mean, again, if it's nothing more than to practice understanding what the terms mean and how it works and how to understand, the worth of a stock, I think is valuable still. So I'm gonna open it up quickly for a comment from Tony and any questions that anybody might have. Any questions? Did I miss? Oh, I'm sorry. I mixed Malachi earlier question. Sorry. It says, so do you try to hop in hype stocks like GameStop or cryptocurrency like Dodge when they're trying to when they're increasing at a high rate? Wonderful question. Go ahead, Tony. What are your thoughts?
I would say this. Malachi, I won't say that you can't get in there and make something happen. But just remember, when they're hot like that, you have to think in the back of your mind, when is it going to come down? So plenty of people have made money off of GameStop, and I mean lots of money. And I congratulate all of them who've done it. I'm a fan of, hey, get what you're going to get out of there. And even with the cryptocurrency right now, with the Bitcoin and Dogecoin, those are out. They're making money also right now. But I will always say still be careful because some things can be hyped up and you jump in. And then once you jump in and drop on you, you end up paying a high price for that stock. And then all of a sudden it collapsed. So what I have to say to you is do your research still. I'm not saying that you can't get in and make some money off of it because it's been some that I got in and made some money off of it. But with the hype part, sometimes you have to sell the hype. So once you start hearing it and you hear some great news on it, you get in, you might want to get in and get out. It might come back down. It might go back up. But don't try to be a pig and be greedy though once you get in there. It's like get what you can get and get out of there because you can get hurt sometimes in those situations. So it's kind of like up to you. Do you want to try to jump in it and make some money? But if I was you, sell a hype. When you start getting in and you start hearing that great news, it's like, it might be time to get out and wait and see what it does. So I'm not opposed to that, but just be very careful doing it.
Yeah, and again, when you got stuff like that, and you guys are young who are on here, but you got, there's risk, right? So the more money that you can make quickly, the higher the risk. That means you can really lose a lot of money quickly too. If you bought, a GM stock, it's going to swing, $2 or $3, for a month. If you get a GameStop stock, you could go from, again, $400, and then I think it went down to $50, right? So you could basically lose all your money in a month. So that's the high risk, high reward type of stuff. Now, again, if you're doing it, you do it with the money that you're not worried about losing, right? but that's really for that high risk stuff. You got to really have the stomach for it then, right? But again, if you know, for anybody else out there who's looking for, you know, the steady investments, those out there for you too. But again, buy the app, get the account, you know, learn, do some fake stuff, right? You just handle some stuff on your in the Excel sheet and understand how much you making and losing every day. You know, that'll get you ready to be able to stomach it. You're like, whoa, shoot, I just lost all that money, that fake money, that could have been for real, right? So you want to make sure you got the stomach for that type of stuff. But like Tony said, it's out there. Somebody's making the money. But some of those are to a certain extent like a pyramid. It can be where if you got in first, then you're the one that's making the money. The people who got in last, you know, the people who bought GameStop at 400 right now, they're suffering, right? Because GameStop is only at two something, right? So that's where, like Tony said, you can get hurt, but you know, it's out there. Be wise, and we're just trying to get you information. So let's close it out like this. What next time I'd like to be able to bring to the table is actually being able to maybe go through the app. I'll try to take some screenshots and maybe we can actually walk through the app and you know, again, kind of learn and make sure people understand how to get in and how to make different choices. And also, you know, just let everybody know that we'll do this again. We'll try to do another episode, you know, within the next month, hopefully even quicker. And just want to get people started and knowledgeable about investing. So thanks everyone for showing up. Appreciate your time. Appreciate everyone that came on the call. Appreciate everyone that's listening to this or looking at this in the different formats. And we'll talk to you later. Have a blessed and wonderful day. Thanks, everyone. Bye.
Bye.